All right, super cool platform here, Andrew. This is really innovative and neat. So nice job with this. So my question is, the diligence on the investors. What's the best tool for that? We've looked into Crunchbase and PitchBook, and obviously those have some subscription fees to that, and we're trying to conserve capital as much as possible. But are those really the right tools, or do you have any other recommendations of where we could find the deals that you've done, the amounts, the valuations of those companies?
Yeah, I'm not sure you're obviously going to be able to get the valuation on all of them, but if you just do regular searches on the portfolio companies, you can pull up. Typically, when they raise a round of financing, it'll be announced publicly for the most part. Some don't, but that's a good way so you can see what size investments and what size rounds that we're participating in. With regards to the size of the fund, again, sometimes they're announced. Like each time you launch a new fund, you announce it because you want to build PR around it. So you may be able to find those. So I think it's just public. You shouldn't have to go buy a subscription to something to try and find out more about us. And I wouldn't advise to that. And whatever information you can't get publicly, then feel free to ask it in the meeting. But in order to get that meeting, you're going to know that, yes, we invest in the kind of businesses like you, because you should look at our portfolio and see the kind of deals that we've done in the past. And look at some of the rounds that have been announced and what size those rounds are. And if they're, in line with what you're looking for, then, that's a good start anyway.
Yeah, there's no shortage of VCs who love to talk about themselves. And if you go onto our website, you'll be able to see exactly what our portfolio is and what it is we're looking for in companies. So that's a great place to start. And another great way to find VCs in the first place is if you look at companies you admire or companies which are similar to whatever it is you're building, and look at who those investors are, and then go onto the websites of those investors. That's a great way to start.
Don't most VCs have websites anyway? I mean, our website shows our investments. It talks about some of our thesis. I think if you just knew some of that information coming into the call, I would be flattered. We don't really want much, but it's just nice to know, that we're not just a checkbook to you, that you see us as, I mean, from my fund standpoint, at least, we like to be strategic investors. We want to be involved. We think we create value for our companies. And it's nice if you know that coming in and you could speak to that. And yeah, it is flattering. So it's it's just smart, Dale Carnegie type stuff.
Great. Maybe
a question, Jeff?
It did. Yeah. Super helpful. Maybe a follow-up question, if you don't mind, unless there's someone else in line, Andrew.
Go for it, Jeff.
Okay, so we're in the business of working on a product for male sexual health, and we're finding that not a lot of VCs have experience or invested in this space, and we've tried to really pitch it on the medical condition that we're trying to solve, but we don't really see ourselves as a medical company, and our market research suggests that there's probably a bigger opportunity for this product in the pleasure side of things, and similar to Viagra in the sense that it was approved for erectile dysfunction, but a lot of the sales are for recreational use. So in your experience, should we try to maybe pivot our message to the investment community around the pleasure side of things, or do we stick with the medical problem that we're trying to solve?
I'll jump in as the doctor on the panel. I would, when we look at companies like this, Jeff, any company that feels that there's a direct consumer angle, but especially if it's a pharmaceutical, I really like to see that the medical community has given its seal of approval for safety. And it always makes me a little nervous. Like I see a lot of longevity products that get sold, and they get sold as sort of the Ponce de Leon miracle cure, and it divorces itself from a coherent medical approach, a scientific approach. And I always worry about snake oil when I read that stuff. I don't really buy it. It turns me off immediately as a scientist. So I would, for me, and again, everybody's different, but for me, I think that the medical approach gives it a validity and safety. I don't have any problem talking about the pleasure. Clearly, if you could create, enhanced male pleasure sexually, we know that's going to sell really well if it's safe. So I would definitely, try and keep it more business-like, and that can get really cheeky too. So I personally, again, I would be very serious about my approach to this rather than silly.
I hear this often actually from founders where they're talking about. I saw some questions on the purple table and the blue table. I'll definitely call on you guys. But I hear this a little bit about industry where founders are saying, "Oh gosh, we're in this very specific industry, and I can't find anyone that does any VCs that do this very itty bitty, very very specific industry." And my reaction, and I think the VC's reaction when I hear this is, "Well, gosh, guys, just open up the industry a little bit more. We focus on medical devices. You don't have to find a VC that only focuses on this exact, very specific type of product." How should founders be thinking about targeting the right VCs in terms of industry and the type of companies maybe they've invested in the past? Like what's the right way to target a VC based on the types of companies they invest in?
Well, I think it starts with, as Oren said a minute ago, go to our website. You'll see our thesis. You'll see companies that we've invested in previously that are in our portfolio. So are you a fit with those? Like, we focus on enterprise software. So if you're a consumer solution or hardware, you're wasting your time. We're not going to get back to you as many times as you call us or email us. We're not going to look at it. So from a starting point, start with the website and the thesis statement, the amount of capital that we invest, that kind of thing, and go from there.
Yeah, and if the idea in the very beginning is so niche that it is impossible to find any VCs willing to look at it, then maybe that suggests that VC funding isn't the right way for that company to go. Maybe it just is too small a target market to really be able to scale to the levels that VCs like to, which isn't a bad thing by any means. Just VC funding isn't for everyone.
Great. Let's jump. I saw some questions at the purple table. Was it Jordan or Alexander that was trying to ask a question? I couldn't see who it was. It was Alexander. Okay, awesome. Let me hand you the mic. You should see an invite on the top of your screen now, and all you need to do is accept it.
Excellent, perfect. Thanks a lot for giving me the call. So look, I just have a very quick question. I don't know if it's the right forum to ask the question. I was just wondering, how early can we raise and look to raise funds? I.e., do we need to have any sort of traction, right? And then the second question, which is also linked to the first one, is, is it the right way to just share the pitch, with different VCs and then wait a few weeks or a few days and then follow up on a call or follow up by email? How does it work in general? Thank you.
I don't think there's one answer to all this. I think, we're an early stage fund, so we look at, we prefer to meet with companies that have already built some technology and have an MVP or whatever it may be, or a few customers. But short answer to your question, you can raise money at any stage. It's just a matter of how much equity you're going to give up, and are you able to, people can raise money off of a pitch deck that haven't built anything, but it's very difficult to do that. But if you've built something and have some traction and you can bootstrap the business a little bit to prove things out, it's going to be much easier to tell the story, sell the story, and then ultimately raise money. So it's really up to you on how far you can take the business before trying to get in front of one of us. And with regards to how to get in front of us, with LinkedIn, with all the different social stuff that's out there, find someone that knows us and try and get a warm intro. That's the easiest way. If you're just emailing cold decks, that's really hard to get visibility with funds these days.
Now, one thing to consider as well is, what exactly do you need the capital for? Because that will help you choose the investor. So if it is to actually build your product in the very first place, then there's a whole load of really fantastic incubator programs or accelerator programs which might be more suitable for you than going to a later stage VC.
I think it's important. Sorry, Andrew, one quick point, and again, it's how the sausage is made. So, I think all of us look at, an order of magnitude or two more companies than we actually invest in. So my first fund is invested in 10 companies. We've looked at hundreds of deals, right? So the likelihood of our saying yes statistically is very low. for a specific deal. And that's true for all VCs. So to some extent, it's a numbers game. You have to get your information in front of as many people as you want. And because I'm saying no a lot more than I'm saying yes by orders of magnitude, I don't really want to spend a whole lot of time with companies that I've deemed to be not good fits for one reason or another. So once I've passed, I just want to move on. And so I think you want to, it's not that I don't want to develop relationships with people, and that's different, but in terms of the investment itself, you want to really think about just how can I best use your time? How can I best use my time? And that's what I try to do as an investor, not, lure people along when I have no intentions of proceeding. And I think as a startup, that's also a wise approach. Maintain professionalism, send your deck out to as many people as you can, get as many warm introductions as you can, and then just sort of spray and pray to some extent.